Hello, everyone, and a happy Friday to you. Welcome to the Wall Street Blockchain Alliance's Crypto Roundup, Friday, April 3rd, 2026. Ron Quaranta here with my amazing friends and co-hosts, David Brill and Josh Klayman, just off the Gulf Stream. It's good to see you both. Before we begin, for everyone in the audience, thank you so much for joining us. LinkedIn Live and X and YouTube. If you've got questions for Josh or I, put them in the chat. We'll try to address them as quickly as we can. Our usual disclaimers, obviously nothing we're talking about is investment or legal advice. And really it's a conversation between the three of us, our own personal opinions, not necessarily the opinions of our firms. David, Josh, I was struck this morning by the fact that it is 25% of the way through 2026, and I still have no idea where we're going. A lot of news going on. Josh, you were missed last week. You'll probably have to tell us about the Gulfstream trip. I know I keep saying it, but let's kick off with you, Josh. It's been a busy week. What's going on?
So, well, I mean, if you'd like to hear about what I was doing over the prior things. So I took a couple of whirlwind trips to London and back. One was to participate in a panel by the UKJT about their control of digital assets publication that they put out. That's the UK Jurisdiction Task Force. So it educates like the judges, which I had contributed to. So I spoke on a panel for that. I also then went back last week. I was with friends, including Joey Garcia and others, for the British Blockchain Association's first ever crypto scientific conference within the Houses of Parliament. So I moderated a panel with someone from the FCA and also Joey about crypto regulation in the UK and what's next and what's going on. And I learned the day before that I would be inducted as a fellow. So now I can put FBBA behind my name. So that was some of the things. Then earlier this week, I was in West Palm Beach for a conference, FO 259 by ARCA, and it was for family offices. And that was really fantastic. It was free, right? And it was very highly curated. It was great. Lewis was on a panel with me.
Lewis Cohen.
Yes, Lewis Cohen. Also Chris Perkins. Also Liz Boysen. So it was really great. So anyway, what about you guys? What's been up with you? And also, I know, actually, I'll throw out my question, but first I would like to know how you're doing. But the question is, what the heck is up with this economic data? I know your heads are popping off about this, but also, how are you?
David, I'm going to dive in. I want to preface all of this with one thing. Just let's all note for the audience, Josh Klayman setting people crypto straight on multiple continents, educating people around the world. Josh, it's been a busy week, and David, let's give you an opportunity to say hello to the group and talk about what you've been doing. But Josh, you've lit a fuse about the economic data. You may not like what I say after, but go ahead.
So my week's been busy too. I was in Washington and had the good fortune to speak at American University's Washington College of Law's first crypto symposium, which went off really well. I think we had a couple of hundred attendees. I was fortunate to be on a panel with Lee Schneider, who we all know, and several other members like Andrew spoke, and a couple of other members spoke, and it was really well attended. And SEC Commissioner Pierce spoke, and it was great. And it was great to see so many students there too. It was a mix of practitioners and students, and it was just really great to see what the future, crypto and blockchain lawyers, are seeing and ingesting and are interested in.
Yep.
And then on the downside was a 5-hour delay getting to DC. I was thinking to myself, I could already be in California before my flight took off. And then on the last note, I'm going to be savoring the case of beer that I won from Greg Murphy with Michigan beating Alabama. And I'm hoping that, my team can make it to the national championship this weekend.
Greg Murphy, shout out to our old friend, WSBA member. If you're watching, double down with David. He's now expecting 2 cases of Molson. So Greg,
gotta give him a chance to win it back.
He did that to me, and it was a steak dinner, Greg, and I'm still paying off that card. No, all kidding aside, David, Josh, you brought up the economic data. The both of you know this, and we text regularly during the week. Around every economic data release day, David, Josh, I will sit there in front of Bloomberg with a cup of coffee waiting for the data. Rarely have I yelled at a TV more than when I saw the jobs data today, David. I think the median estimate was something like 65,000 new jobs. We were almost 300% beyond that. We made 178,000 jobs in the prior month. David, the revisions for last year, and I'm just looking at my notes, I think last month, for February rather, we lost 92,000 jobs. No, we lost 133,000 jobs. We are looking at 400,000 data point shifts in the data. I've got a lot to say about it, but David, how did you react when you saw this?
Well, let's just say that wasn't on my bingo card for today. Look, I think one thing we do have to remember is that some of the data came in really prior to the conflict starting, or it was at the beginning stages. So that part of it, that part of the frame is something important to keep in mind. But also, I think as I think about it, we don't have an oil shortage in the US. It's really a global issue. It's not our issue. We actually export oil. So, we are not going to be in a situation where we have trouble with access to oil. It's just going to be that the price is going to accelerate higher. Yeah. So I don't think people felt that in this first month. So I was thinking about it that way. And then someone else on Bloomberg made a point that maybe the denominator is changing because of less people in the US. So less immigration and people leaving the US. So that was something that I thought was thoughtful and something I hadn't really thought of. So that might explain some of it, but to say it was a surprise was an understatement.
David, and I'm with you, and the Bentley's getting more expensive to gas up. I get it for both of us. But I think what's bothering me about this, what I'm alluding to is, and if we pull it back to crypto, we've often said risk on, risk off. It is hard to determine risk on, risk off in a market like this, particularly given some of the challenges you're talking about, David. We've got the Iran conflict. We've got immigration policy issues. Washington is crazy. But David, Josh, the thing that really bothers me or frustrates me about this is that economic policy is determined across the board based on the data that we're reading. And my fundamental premise is that the underlying data and how it's calculated is fundamentally not keeping up with the economy globally. And, shout out to Pompliano again, and we don't have any interest in the economics of trueflation, but markets move faster than I think the government is able to collect data for. And we're beginning to see that. And I'm concerned that economic decisions will be made because of that. And when you listen to business radio, David, Josh, we all know this, there'll be multiple interest rate cuts this year. There'll be multiple, there should be more. And then you'll hear another pundit saying, no, we should raise interest rates. It just adds to the chaos of the market. And Chris Broderson, good point. What about the reduction in workforce of $400,000? And again, I'm not trying to throw a blanket statement out there. There's a lot of nuance to this. Unemployment dropped to 4.3%, arguably because some people got pulled out of the workforce. I'm going to stop talking because I clearly had espresso this morning. But I'd love your thoughts, guys.
Well, look, again, like I said before, I do think some of the data was early. And look, of course, it's going to be revised. And look, we said this under the Biden administration. We're saying it now, so we're being consistent. It's not politically driven. It's a function of the challenges we have. I will say this, Ron. We are seeing a ton of, and when I say we, I mean just generally speaking, a lot of deals being done. M&A has been very, very busy this quarter. AI has been, some of the SpaceX IPO might be the largest of all time. So I think that there's a part of the market that's just not affected by all of this and is really booming. So I think we just have to look at it in the totality of things. But as somebody else had said, and we talked about previously, this K-shaped recovery really is going to kick people who are in the lower part of the K versus the upper part of the K.
And that matters.
Yeah, and it matters a lot. But I think that's what we're really going to see.
Yeah. And just one last thing to that, Josh. I'm sorry to interrupt, but
no worries.
Obviously I've been ranting about this for hours. To Chris Broderson's point about the reduction in workforce to 400K, that sort of parallels or reflects the consumer sentiment. It is interesting because we're seeing investment, we're seeing, arguably corporations are doing okay, generally speaking. Then we see weird hiring data and we see consumer sentiment, dropping to multi-year lows. Josh, go ahead. I cut you off. Sorry.
No worries. So I agree with you guys about this tale of two worlds. And what David has said about activity in the market. I mean, just personally, in the past week, I've had 3 major new, what I would call landmark deals come in, all of which are on pretty aggressive timelines. I'm not used to getting a deal and then the next day another deal and then the next day another deal or something like that, from the same places of a giant magnitude. I mean, maybe I should be. That's what I aspire to do, is that every day I'm just oh yeah, more. But no, it's completely, it's interesting. I do think, some of that might have to do with some of the guidance that the SEC and the CFTC have come out with and things like that, and greater confidence that there will be a path forward no matter what happens with market structure. But I have to say, back with the data, I mean, question for you guys, we always hear about garbage in, garbage out when we talk about information and certain, systems, whether it's AI or other things. But is this bad data, or are we asking the wrong questions? How can it be that the data is always wrong? Is it just the lag, or is there? What do you guys think? And by the way, if we ever need a fallback name for this session, I think we could go with it's the revisions.
I mean, look, Josh, it's a great question, and I have theories about it. David, you and I have talked about this many, many times. I don't necessarily subscribe to the idea that it's bad data, and I do not subscribe to it's all political data. I know some people do. What I subscribe to is the idea that we're really looking at inflection points in how the economy operates. When we talk about AI, when we talk about crypto, when we talk about quantum, when we talk about some of the capital investments that are happening for the future, those are percolating through the economy, I think, in ways that are faster than people anticipated. And that simply means, when you look at how they collected previous data, it's a small subset of a ginormous economy. It's generally very manual, hands-on, and in general, it very much lags, and it's very hard to get accurate data. The problem is the way, Chris Broderson, again, you're absolutely right. The problem is the way the data is collected. Remember, some of this data is still collected by, let's call up a data point company and ask them if they hired this month. And, David, weigh in here, because I want to make sure I'm not going overboard on the criticism. It's just a matter of things are evolving and data collection is not keeping up.
Yeah, I think, what Elon Musk was doing last year, I think it's too bad this department got skipped, because this is an area where we really could use streamlining and data mining, and maybe there's an AI component to it that we could use. But it is very challenging to have economic policy based on numbers that constantly get revised.
Yeah.
And I share Ron's frustration on that.
A question, and sorry to have started it before you were finished your sentence, David.
Kick this off, Josh. We're going down the rabbit hole.
Who benefits from the current way the data is collected?
No.
Right? No one?
I don't
So you think it's just an incumbent, an incumbency problem, or an inertia problem, that's how it's been done? So that's how it's been doing.
Problem. I don't think it's a political problem. I don't think some politicians sitting in the back room in DC saying, ha, we got the Bureau of Labor Statistics to report this data, and Trump screwing up or something. I just think it's an inertia problem. It's a very large bureaucratic body in a large bureaucratic government, and they still have green bar dot matrix printers in the background.
One positive thing, sorry, Josh, one positive thing to note is that, the jobs that are being created are private jobs, and they're not government jobs. Government jobs are declining a little bit. So at least that the jobs that are being created, whatever they actually end up being, are, private sector jobs, not government jobs. So I think that is also positive.
And on that point, David, that sounds very different from what we were seeing before. Like when you had been saying, yeah, there's all these new jobs back in the day, whether true or not, as it turned out, but that they appeared to be, if I'm remembering correctly, largely government jobs and often part-time jobs.
Yeah.
Yeah. A little bit of stuff in the data box, so to speak. But no, look, I do think it's really a tale of two economies. And I just think the K is going to be even a bigger K, if you can imagine it that way, this year.
Yeah. David Wysocki, good comment. Shout out to David, who co-chairs with Chris, our tokenization working group. Every trading desk and fund uses multiple alternative data feeds. Absolutely, David, you're right. To assess economic indicators apart from government feeds. It's expanding that way for more than a decade. Yeah, and my argument to that, in agreement with you, David, is that they don't have a choice. They have to. I am just struck by the magnitude of skew and volatility across the board of those numbers. Even in the wake of, again, we can talk about data collection until the cows come home. Poor data collection methods. The volatility is still striking to me.
Yeah, agreed.
Chris, Josh, I've got a question for you, if I could. And I know you mentioned some firms and new deals that crossed your path. Obviously not asking names of firms, but can you talk about what verticals they're in? Are they all similar segments? I'm just curious about how that pipeline looks across the industry.
Without giving anything away, I would say they're all involving major global financial institutions getting more and more involved in actual crypto.
Yeah.
Great.
No, it's good to hear, Josh. And last, another comment, David, the government feed is valuable because of its longevity and historical comparisons. Absolutely. And when David and Chris start their own blockchain-based Bureau of Labor Statistics, we'll highlight their data here as well. David, Chris, Greg, thank you so much. David, Josh, the other thing we need to talk about is obviously crypto. We'd be
What's that?
I know, I've been spending on economics. David, I did something interesting today. Josh, I tried to be David's, think like David today. So I started trolling through options data on BTC. David, tell me if I'm looking at this incorrectly. No crystal ball. Just doing some research. I'm looking at BTC primarily because it is the most liquidity there, David. High implied volatility across the board, I think approaching 50%. But most of the strikes are almost where we're at now, 67, 68. Are we sort of treading water on future options plays?
I think the market is skewing towards, again, holders selling covered calls. Yeah. I think with everything going on in the world, I don't think there's a lot of upside volatility. I don't think there's a view that while this is going on, that there's strong gains to be had. And we're still in a stage 4 downtrend. So there's not a lot of data points that suggest, wanting to go long or doing a lot of out of the money kind of calls. So I think that's what we're seeing.
But David, to that point, you've said stage 4 downturn in the past. You and I talk about that and know what that means. But for the audience, you're saying essentially late stage kind of downturns, correct?
Yeah,
late in the cycle.
It is late in the cycle, but it could go on for quite a while.
Fair.
But that's the problem, Ron. Yes. I mean, I just think right now we don't have a real catalyst. I think that my view is what the CFTC and the SEC agreed to, and the law that will come into place is a real catalyst that's being underweighted by the market. Because as I said before, even if we don't get clarity, we're still going to have those rules put in place and that law put in place. And that will be sort of what will be guiding us in that period of time until we get a bill. So I think for corporations, and maybe Josh's, data sort of speaks to that, is that the companies are feeling between what the SEC and the CFTC's done, that they can move forward. And that ideally we'll get clarity as well, but that there's enough in place to give them the comfort to move forward. Not that I'm speaking for your clients, Josh, but I'm projecting.
But David, I want to push on that a little bit if you and Josh will indulge me. I'm with you on the late stage kind of metrics of it and looking at things like implied volatility. However, and someone in the audience, correct me if I'm wrong, I think it was Goldman, some financial house put forward, we're probably making a bottom here in crypto.
Yeah.
So it makes me ask, so are they calling it a bottom waiting for a catalyst like end to Iran conflict or passage of genius? Like, what are they basing that on is my question.
Well, just because you have an end of a stage 4, you can also consolidate in that end of stage 4. So it could be, we don't think we're going to go meaningfully lower from here, but it could consolidate here for a while. So I think that's what I would say. Yeah. I'm still going to reiterate that I think the market hasn't priced in, what the CFTC and the SEC has done and what clarity could do for the market. But also, look, it's hard to buy risk assets when you have these geopolitical risks going on. And I think, look, I don't want to get into I have certain views on this, but I think generally speaking, that until we get to a place where we have a really firm view on how long this may last, I think anytime there's uncertainty in the market, people trade defensively.
It just feels like, David, the more we keep wishing that there's a little less chaos, the more chaos ends up coming up. And it's hard to plan forward based on that chaos.
I think the way I've been looking at it is that this was going to happen at some point, and it's better that it happened when we're driving it than it happens in an event that we're not driving it and we're reacting to it. So that's how I think about it. I know Jamie Dimon was saying something similarly. Yeah. But look, we also have to look at the possibility this conflict gets resolved. And then maybe that leads to the Russia-Ukraine conflict getting resolved. And suddenly the world's a much more interesting place with a lot less conflict.
Yeah.
So there is a potential for that knock-on effect too.
Is he going to say golden age is coming up?
As long as he doesn't say Roman Empire.
No, but think about it.
Oh my goodness.
If those things were to resolve, think how that would be for the global economy.
So may I jump in here, guys?
Please, I'm sorry.
One thing that I have a lot to say about the SEC, CFTC stuff, but holding that aside for a moment, just staying with the current conflict. So one thing I'm wondering, when you talk about, okay, if the conflict resolves, what I've been reading, which I'm sure is you guys have read 10 times what I read and have other insights as well, but I've been reading about large-scale destruction of infrastructure that's going to take years to rebuild, not just in Iran, but in Qatar, in other countries. And I was reading also about how, I don't know if it's true or not, but that due to drone strikes in Russia, there has been, significant impairment of their own oil production capabilities, which one had thought would make things, things would shift to that, and especially with sanctions being loosened. My understanding is with respect to certain oil. So I'm just wondering, and I assume in the UAE as well with some of the upheaval there. So just even if we say today, there's some sort of end to the conflict, what do you think the long tail is going to be on this?
David, you could take that one first. I have thoughts.
Sorry, I mean to be
it's a fair question, and well, look, we have the Venezuela oil that's come on since that's ended, so that's somewhat of a, and I think if Iranian oil was no longer embargoed because there's a new regime or a regime that's going to act differently, that's a lot of oil that could be sold into the market that has been restricted and has been sold on the black market to certain countries. So look, I don't know all the damage in the UAE and Dubai and Qatar, but some of that may also be natural gas and not oil as well. Yeah. So look, I think we need to figure out what it's all going to look like when this is over, because obviously there could be more strikes. But again, I think that if this threat is taken out, I think that the economy will be better for it. And I really do, and I guess I could be a little bit hopeful that it has the knock-on effect of if you take Iran out, Russia relies on a lot of the oil and other things and weaponry from Iran, that it might compel some sort of settlement to that conflict in Ukraine.
So David, I'll weigh in on that as well, Josh, if I can. And again, we've spoken about this a lot. David, I agree with you. I think a lot of what's happening, Iran is its own case, Venezuela is its own case. We're not here to weigh in on the political aspects of it. But they're also very much about China and Russia and the grand geopolitical stage that all of the great powers sit on, which is a multi-year, multi-decade thing. I'm going to be a little more Machiavellian as well, and I don't mean to be, David, but and again, there's a human toll to these conflicts. There's an economic toll to these conflicts. But if you look at resolution to these conflicts and you look at, Josh, the damage that you're talking about, those are construction projects for the next decade. That is economic activity for those countries. Again, not minimizing the toll of it and human tragedy of it. That is future economic growth if there's a regime there that is slightly less vitriolic against anything Western. And that might be a good thing in the long term. Again, not minimizing the difficulties of this, but there's a long tail play to this, Josh, that you allude to.
Yeah. And
I'm sure I'm going to get hate mail from someone. I'm sorry. I'm just kind of looking down the longer road, David.
Yeah, no, look, I agree. There's a number of, chess pieces that are being moved around the board. And, we have to be cognizant of that as well.
Josh is taking calls from the Klayman family office.
Sorry, I got like an urgent text.
I know you well
looking
enough
at
to
it. Sorry, guys. Sorry.
Josh is like, oh, I agree with David. I'm gonna short some Bitcoin calls now.
Yeah.
I'm gonna buy some puts now for the next.
I got called by the teacher.
For everyone in the audience, I'm totally joking. Please, Josh is not trading anything. This is full disclosure, but it does bring me to, coming back to the overall crypto markets. It's very easy, Josh, David, for us to talk about. And Josh, don't think we're not coming back to SEC and CFTC. We definitely have to. But David, I spend a lot of time like you. We look at BTC and Ethereum. I had a long conversation with some colleagues in Europe about, from an institutional perspective, do they build on Solana? Do they build on Canton? I'm going to come back to a David issue, which is the alts. And it strikes me that there's still a divergence between BTC and alts, but it looks like that divergence is compressing on a price basis. David, am I incorrect?
I think the correlations are both going down.
Yeah, correlations are all negative.
Correlation and causation.
Correlation that brings us further lower, whatever works.
Look, I do think that I think that the market dynamics need to change, but I do think that when we do finally have a catalyst, that we will see a lot of pent up interest and we'll see some very large moves in the short term when that happens. But again, fundamentally, until we can really figure out how to value some of the altcoins.
Josh, go ahead, David.
It's just harder to value them. But like I've said before, builders keep building. And I think some of these projects are more valuable today than they were, absolutely more valuable than they were 4 or 5 years ago. And even though they're trading at the same price.
Yeah, and it comes down to use case as well, David. This is not investment advice, but there are some alts out there that don't have great use cases. There are others that could almost look like a bargain. I don't know what Josh is looking at because he's not looking at us.
No, what made me start laughing, and this is for the audience, they're probably going to think I'm silly, but the way Ron asked the question to David, and David very seriously said, well, the market dynamics need to change. There was something about the way he said that, it made me, because, yes, we want them to change. But yes,
it's been a long week, everyone.
Ron's working on speaking it into existence. If you say it enough, it's going to happen.
I shall will it into existence, David. I need a vacation. David, Josh, sorry.
I love you guys.
You too. Go ahead.
Oh, no. I can. Would you like to cover more on this topic or cover?
We're not remotely done, but I'm going to loop you into this.
Keep going. I love it.
David,
I promise I won't laugh.
You can laugh all you want. It's delightful. David, you've been saying catalyst several times. Again, we get it. We agree with you. I want to bring back a conversation we all had, and shout out. I hope Adam Goldberg is watching, our policy expert. Josh, we've been talking about SEC, CFTC. We've been talking about the kind of, I'm going to use the word loosely, frameworks that they've been putting forward for crypto. I guess, David, what is the more important catalyst? Does Genius passing or not passing, or some geopolitical tension going away?
Well, I think for our industry, it's getting these laws codified between the agreement between the SEC and the CFTC, and ideally getting a form of clarity that the industry, agrees with. But I think if you're talking about from a trading perspective, I think getting this resolved would certainly go a long way to moving the mood. There's just a lot going on, Ron. Like countries are selling their gold to raise money to offset the price of oil. I think Turkey sold a lot of gold, and I think the Middle Eastern countries have been selling some gold because they didn't expect to have this collateral damage. I think countries like Dubai, the UAE and Qatar are suffering economic damages that they didn't expect. And so, they're working on raising money, whether it's selling gold or just having different pools of money to work from. So I just think there's a lot of these crosswinds going on, and we're not sure what Iran is doing with its Bitcoin. I hear that they're collecting Bitcoin as a tax to get through the Strait of Hormuz. It's really hard to tell, but it also feels like maybe some people are selling Bitcoin to raise fiat because they feel like they need it right now. So that could be going on also.
Go ahead, Josh.
And I think building on what David said about different countries, I mean, what I've been reading also is, we have the experience of being in a place where maybe our gas price goes up, but we're still going to pay it, right? People are still going to pay the gas price. But then in some other countries, there's been, limits put on or unavailability of cooking oil or something like that. I don't know if that I might be mixing things, but this is what I recall reading, just that the impact of this current crisis or current situation on other economies beyond the rich countries, so to speak, has been a lot more devastating already.
Yeah. And Josh, to that point, I think I had heard earlier this morning that some Asian countries are mandating 4-day instead of 5-day work weeks simply to get cars off the road and save fuel. So there's a lot going on. You're absolutely.
And who knows how much crypto or something is held there, right? Yeah, or what activities are going on. I mean, do you guys think that this could have an effect on mining activity, or am I mixing things? Probably mixing.
Well, I mean, it depends on, a lot of the miners use natural gas. A lot of, it depends on what the modality of how they mine is. I'm more looking at, for the miners, particularly stateside, and David, you probably know the data better than I do. I think their break even is 60. I could be wrong. Someone in the audience correct me. But if we leg much lower on BTC, it doesn't pay for them to mine.
Yeah. And also, look, I think a couple of them, I think Maris sold their Bitcoin holdings. And no, I think there is an effect. And also one other thing I want to mention is that our gas prices really are sort of artificially high because we have so much tax layered in on a state basis. So our prices, California, I think, has $4 worth of taxes, or some very high amount in taxes that are layered into the oil price. So if you had taken some of those taxes out, I think the oil prices still wouldn't be that high. So I just don't think our economy is affected in the fact that people are paying more at the pump. But it's not going to be an issue of access or buying gas on and odd even days and things like that.
Yeah, Josh, that's David's way of telling us he's gone from super to regular on the Bugatti. These things get expensive.
Yeah.
I mean, he could always just, I guess, I don't want to say lay off, but he could just, what is it called?
Lay off on the cruising with the Bugatti in Miami Beach.
About his driver. What is it called when you put them on temporary?
Furlough.
Yes.
He's going to furlough his chauffeur. Josh,
boy. Candidly, I love our high-speed train in Florida. You don't sit in traffic and you make it down in 40 minutes. But so I'm carbon neutral, Josh,
So, Josh, we've got diesel is the biggest issue. Greg Murphy, Kamad's man, has forgotten more about this than I know. He's absolutely right. And it's interesting. Josh, in New Jersey, I had driven past a gas station and the diesel price was something like $2 more per gallon than the standard, regular gasoline. So, Greg, a good point. And a lot of trucking and a lot of transport for goods is based on diesel vehicles. And Greg, absolutely right. That feeds into some of the underlying price pressure and inflation. Josh, I wanted to come back to you if I could, because we've said SEC and CFTC many times. full disclosure, the three of us, along with a contingent from WSBA, are meeting with both bodies in May. I guess the question becomes, how much more? I'd seen an article, and I didn't read it, Josh, forgive me, that someone noted the SEC still has a lot to do. In the conversations you have with clients and in the industry, Josh, what more do the regulators need to do, in your opinion?
So I think, I'm not sure which article you're referring to.
I don't even remember
what I would say is one critique that I've seen, which I do have appreciation for, although I will add something just about a way I think we get out of it, right? Is that if you think about the SEC CFTC guidance, the joint guidance, one of the things they did was they named 5 categories of tokens, right? They had digital commodities, of which they included Bitcoin, ETH, Sol, DOT, like a number of them, right? And then they also had digital collectibles, then digital tools, then stable coins, and then digital securities, right? Token securities. And then they also said, this is just a review for those at home, I know you guys know this, they said that protocol mining, protocol staking, and certain airdrops where there's not investments of money or things like that, that those generally don't involve offer and sale of securities. One piece that I think has attracted a lot of attention is that, under the law, the Howey test still exists, right? So there is an aspect of, if you are fundraising, right? In certain situations, you may be, if you satisfy the Howey test, an investment of money in a common enterprise with a reasonable expectation of profit based solely or primarily on the managerial or entrepreneurial efforts of others, for all of those watching at home.
Effortless, David. She was effortless.
And it's been a while since I've said that out loud. But if you meet all 4 of those prongs, you can have an investment contract, which is a form of security. There also are other tests like the Reeves test and other things to say whether there are certain other securities. But what the SEC and the CFTC said in this guidance is that if you have an investment contract, right, by the issuer of a token, then that token may attach to the investment contract and be a security for a period of time, right? But it says that there are ways that it ceases to become a security. For example, if work is stopped, or if what was promised in the contract is delivered. And I think that has been an area of critique just because there still is uncertainty. There's going to be uncertainty, however, because it is a facts and circumstances test and it's based on Supreme Court precedent. So there's, it's the law and it doesn't just apply to crypto. What I would say, and I'm very happy to say this, is that, as you guys know, with a certain project that we've talked about for Polkadot, we went through with the issuer of the DOT token a 3-year process with the SEC. And one of the things that we did was talk about how if you offer and sell a token pursuant to exemptions from registration, you can later get to a point where you have satisfied that contract and certain other things, and then you no longer have a security. And I do think that the wording of that SEC CFTC statement in that section, I think if folks look back to what was done, and we have podcasts about it and all kinds of things, in the case of Polkadot, I think it is very helpful. It will be very helpful in helping show a way out of it. Again, I understand that this is not satisfying to people. People want to get straight to digital commodity. But at least there is a path. So anyway.
No, Josh,
that's what I think you might be talking about, but
that is what I'm talking about. Absolutely. And for the layperson like me, one of the things I've been talking to people a lot about, and Josh, David, correct me if I'm misperceiving it, as we go through what SEC and CFTC have put forward, you've raised morphing in a sense, Josh, that we've had.
Yes, I just was staying away from that word.
I know, I'm sorry. But I think what I've been trying to explain to people, and someone correct me if I'm wrong, is that the transaction itself may be subject to Howey, maybe an investment contract, but the token is not necessarily an investment contract. Is that a proper way for the layperson to look at it, Josh?
I think the courts have said, the token itself is code, but I think what the SEC and the CFTC have said in this guidance is that when you sell it pursuant to an investment contract, it attaches. Yes. And so even in secondary trading, for so long as it is attached to that investment contract, you have to treat it like a security.
Yep.
And so since you brought up morphing, I know like those watching, this is a sensitive word,
people.
But what we had talked about in connection with that was the idea that, DOT had started out as a security and then had become software. Now, the reason that software was chosen as a word was that there was no involvement of the CFTC in these discussions. I think what we can say now is that when you get out of that process, you're a digital commodity.
Right.
Most likely, right? Or one of the other categories, presumably. And I also would like to say, I'm not advocating any view. I did not re-advocate this view. Agreed. If the SEC would have come out and said that secondary sales are never sales of securities, I would have been very happy. I think I'm at least happy that the way they came out, we do have at least one example in the market of how a project did that.
Josh, David, can I ask one more question out of my own ignorance? How deeply have they approached this concept in their guidance of sufficiently decentralized? It seems to be something that's not yet, it's never been fully defined, and I feel it hear it percolating up in different conversations. Am I misperceiving the guidance they've put forward and that concept of sufficiently decentralized?
I'm letting Josh.
No one wants that.
Keep Josh in the flow.
I think it's an interesting question. I don't think there is a specific answer.
Yeah.
I think, unfortunately or fortunately, it will always be facts and circumstances.
Sure.
Now, in other comments I have heard prior to this statement being raised, I've heard questions about, how relevant is decentralization to a securities law analysis. Again, I think it would be useful for maybe folks to think about some of the things we talked about in the context of DOT, not because I'm saying that that's the way to go, but just because I think it's helpful in terms of looking at least what the SEC staff was open to before. Yeah. I think the idea is, for better or for worse, we're stuck with this idea of the efforts of others, the managerial or entrepreneurial efforts of others, because that's part of this Supreme Court test articulated in the SEC v. W.J. Howie, or whatever the full name of the case is, which I should know. And so, unfortunately, while I don't think I think sometimes people think, decentralization in and of itself is a good thing, a positive thing. And maybe it is. Maybe in certain circumstances it is. Certainly there are reasons for which it can be good. But from a securities law perspective, what we're really talking about is, are people relying on the efforts of identified folks here, the issuer, right, in the SEC's guidance, to do something, to build something out that they promised to do that's going to result in a return. So I think, unfortunately, while we'd probably like to, all of us, dispense with this, it's not so easy to just dispense with it.
For everyone in the audience, I'm going to get yelled at for raising sufficiently decentralized. Everyone, David, go ahead.
The other thing to keep in mind is that if you're going to be a broker or an exchange, you need to be able to classify these tokens. And like when I was at Voyager, we had a whole process where we went through. We did an analysis on whether we could list a token or not. And so exchanges, brokers are going to have to go through that analysis and treat different crypto assets accordingly. And so if they were to decide one as a security, it's a whole different regime that they have to treat it under as if it was a commodity. Yeah. So that's why it matters.
David, Josh, thanks so much. I just want to give some airtime to Chris and Greg, setting us on the straight and narrow and educating us. Just going back to our prior conversation, Bitcoin mining break-even depends on the miner. Absolutely, Chris. He's seen estimates of 35 to 45 for best in class. Yes, going up to 80 for others, which I would argue is a lot of them. And don't forget about liquid natural gas and fertilizer, absolutely critical components of the conversation around mining and usage. And as an aside, liquid natural gas, as I understand it, is much more supply constrained than oil. Someone in the commodities market educate me. Greg Murphy, a lot of fertilizer from Middle East goes to Africa. Countries are very right about drops in production. Absolutely agree. A lot of food production goes to Gulf states. And that's an interesting point. Greg was on a call. We had this conversation not too long ago where the cargo disruption from conflicts like this, David, is not just oil and gas, it's food, which is critical for some of these countries. So really good points. Thank you, Chris. Thank you, Greg. We're running up on time soon. David and Josh, there's so much going on. Part of the chaos is keeping up with all of the information that's put out there. And Josh, I'm coming to you because I have yet to read the Google report on quantum risk. And I'm not looking forward to reading it this weekend. I'm curious about your perspectives on it. And this is very self-serving, and I'll tell the audience why in a minute.
I mean, I think one of the big things was this report, the spoiler is quantum risk is ahead of what some people have said as a timeline. So it said something like it's ahead of a 2029 timeline. Now, if you've heard us talk before, you know that some things are immediately on the horizon, right? So if you're thinking about harvest now, decrypt later, there are folks out there who are collecting data that's encrypted with a view of decrypting it. And this topic, not just in this Google report, but also worldwide. I mean, when I was at Parliament last week, there was someone from a UN agency talking about doing a report on quantum and saying, raising this idea. His name was Dino. I want to follow up with him. He's great. Apologies, I don't remember his last name. But he was saying, it's not just harvest now, decrypt later. In the case of identity and signatures, because it's not just crypto that will be affected by this, it's harvest now, forge later. And so, it's not just, okay, you need to keep data private for a long time, which may be for banks or governments or healthcare organizations, that's something. But also, if you have digital identity of some kind and it's encrypted, harvest now, forge later, it doesn't matter how long you have to keep that private. As soon as you encrypt it, who knows what can happen. So I know that doesn't really go into detail about the Google report, but I think this is all converging. And I really can't wait until we have our webinar.
Yes, which we absolutely have to get on the calendar because the date keeps pushing, Josh, and I'm sorry. We'll figure it out. We're going to have you and a couple of experts on. David, I want to apologize. I don't ask you about quantum enough. Is that something that crosses your radar at all?
It's something I do think about, and I think about it in terms of, second order effects. So maybe even before we focus on protocols, are the crypto wallets that we use quantum resistant? Because those might be the first ones that are targeted. And some people have older crypto wallets. They might have old MetaMask wallets. I just wonder if those wallets are going to be susceptible, whether it be Phantom or MetaMask or whatever. Are those going to be the first layer that are more susceptible to quantum attacks before the actual protocols?
Yeah. David, Josh, it also, I've got one last question on this. And Josh, I'm still kind of mounting the learning curve. I know you need to drop soon. We're running up on time. It's not just, the bad guys building out quantum capabilities though, right, Josh? There's a lot of work from the good guys trying to protect in a quantum future, no?
100%. And let me just say, a lot of times quantum has been the boogeyman off in the distance for people who want to say, oh, what about blockchain? It's going to go away with quantum. It really, there are there's lots of work going on right now, including with government agencies, because they've been directed to become quantum resistant, right? There are ways to, for example, one of the algorithms decreases, Grover's algorithm decreases the strength of a hash, right? And so ways to build it up, right? So, so that you can have, I don't want to call it a patch, but, so you can make it quantum resistant. Shor's algorithm, which that is one that would enable people to take encrypted data like a private key, or a public key rather, and derive a private key from it. There are ways to address these sorts of things. And I think it's particularly important that we do focus on these companies looking into this because, if you think about all the tokenization that's happening and all the movement of the traditional, not just payment rails, but really traditional financial rails onto new technology, we should be planning for this, and we should be thinking about it at the architectural phase, as well as thinking about what kind of risks we need to be disclosing.
Yeah, Josh, great points. David, this is the payback we get for embedding risk on in Josh's brain. We now hear Shore's algorithm as a regular part of the live stream. David, Josh, let's wrap it up there. I know you're both busy. We've got a lot of work coming up. David, what are you going to be focusing on in the coming weekend? And good holidays to everyone who's going to be celebrating over the next few days.
Well, like Josh, I have a fair amount of work to pile through, and I'll be working through certainly reading, and there is a little bit of a soap opera-ish feel towards the different drafts of Clarity. So maybe we'll get a draft out this weekend or something more to chew on. I will find a little time to watch my Michigan Wolverines hopefully win the the college championship.
Who are they playing?
They play Arizona on Saturday, and then if they were to win, they play the winner of Illinois and UConn on Monday. So, I will certainly be catching the game on Saturday and hoping that we win and win the championship on Monday. And I even wore my national championship Michigan.
I feel it's just like poking at wearing that. I'm sorry,
representing for my school, but also really just doing a lot of reading and reflecting. It's a holiday for most major religions, and just reflecting on where things stand and what we can all do as human beings to improve life for the people around us.
Yeah. Josh?
I mean, what he said, right? I think, I'm wishing everybody a good holiday if you celebrate whatever you celebrate. If you don't celebrate anything, I'm wishing you a good weekend. Catching up on work, catching up on some of the reports, trying to spend some time with family, and what about you, Ron?
We'll be spending time with family. I will try not to text the both of you on a repeated basis. I am waiting for Elon's call about my allocation for the SpaceX IPO, but I'm not sure I'll ever get that call. David, Josh, it's so good to see you both. Thank you so much. Chris, Greg, David, thank you so much for watching. For everyone out there, thank you for your time. If you've got additional questions for David or Josh or I, info@wsba.co, and we will be back next week. Have a great weekend, everyone. Take care.
Take care.
Bye.